You all know that in order to move people's money around, generally speaking, you're regulated in one of two ways. You're either a bank or a money transmitter. Money transmitters are regulated at the state level. Banks can be regulated at the state level, but increasingly it's harder for banks to operate within the borders of one state, so they seek federal regulation. The OCC, the Office of Comptroller of the Currency, is the principal regulator of banks. They have what's called a special purpose bank charter that's been used by a very small number of banks. There are banks that are credit card banks, for example. There are some trust banks that have used this charter that's been around for a long time. And on July 31st, the OCC announced that they're going to permit fintech companies to apply for a bank charter. Now, what's the significance of that? That means that fintech companies, and I use that term broadly, obviously mobile payments providers and the like are fintech companies, but there are a lot of categories of fintech companies out there now. They now have the option, instead of going and getting a money transmitter license on a state-by-state basis, or instead of partnering with a bank to have the ability to move funds around, they can now get a charter from the OCC. It's essentially a bank license light, if you will. Banks do three things. They take deposits, they lend money, and they cash checks. This charter applies to two of those three things. You're not allowed to take deposits under this, but you are allowed to lend money. So I think we'll see a lot of activity from the Cabbages and the OnDecks and the Can Capitals of the world. Square Capital, if you will. Square has filed for a bank license and then withdrew it, and may or may not file under this new charter. So I bring that up at the outset because I think that's going to create a lot of activity in the startup space from fintechs that didn't think they had a clear path to being actual money transmitters because they didn't want to go to 50 different states, or 49. Montana still doesn't have a money transmitter license, so maybe that's the place to go do business. They didn't want to go to all those different states to get licensed. Now the OCC has given them the option of doing it at the federal level. This was part of a report that the Treasury Department put out on July 31st, outlining a number of steps that it recommended the administration take in order to encourage fintechs. And it's a positive environment, regulatory environment for fintechs currently. A second and related area of activity related to the transmission of money is the Federal Reserve's Faster Payments Initiative, which also has a corollary. The Federal Reserve is one of two operators of ACH networks, as you know. The clearinghouse is the other one. They also have an initiative at the clearinghouse on real-time payments, they call it. The reason I bring that up is that is moving forward. NACHA, which is the rule-writing organization for the ACH networks, has implemented faster payments. And it's attracting a lot of attention in the first instance from banks, which have an interest in deploying services like Zelle, which you're probably familiar with, because everyone in this room is over the age of 22 and doesn't use Venmo. The banks are looking for options for peer-to-peer services. Zelle has been very popular. By some measures, the publicly announced figures that Zelle has released suggest that they have caught up to Venmo's processing volume, although some have suggested that that is not a real figure because it actually involves just movement of money within a bank. So I use Zelle frequently to move money from myself as a Bank of America customer to somebody else who's a Bank of America customer. That counts as volume for Zelle, even though it's within a single bank. Whatever the volume numbers are, clearly Zelle is very popular, and it shows an interest in faster payments. Faster payments has been talked about to be used in areas that really haven't been subject to as much innovation in mobile payments as some others. For example, payroll, which is obviously an area that's ripe for innovation. Consumers moving money between their own accounts, for example, expedited bill payments, B2B payments. These are all areas that faster payments may make more accessible to innovation, and that's a positive as well. So OCC charter, faster payments. Tariffs is another big area of focus in DC right now. Actually, just prior to coming here, I was testifying before the United States Trade Representative and an interagency group under Section 301 of our tariff laws that requires the government to get input from industries. You may know, or you may not know, that on the tariff list, when it first came out, was a 25% tariff on all POS devices. So for the mobile payments industry, obviously that's not good. That increases devices costs by 25%. So I testified against that. It was actually taken off the list, which was a good development. And then the administration came out and announced another $200 billion in tariffs for Chinese products, and parts for POS devices was on the list. So you can get the whole thing without the tariff, but if you order any parts to repair it, for example, 25% tariff. So I went back in and testified against that yesterday. That's obviously a very dangerous thing for us. We support free trade in the payments industry. ETA is the trade association of the payments industry, is opposed to tariffs. Somewhere between 95 and 100% of POS devices in the US are manufactured in China. That's just a fact of life. And the ability of us, even though we may like to think about doing it, to move all the manufacturing back to the US, it just doesn't exist for a host of reasons that I testified about. So we're hopeful that that 25% tariff won't be implemented either. A couple notes out of the states. Data breach notification. This is a big area. States obviously trying to protect their consumers, their residents. Continue to adopt new laws related to data breach notification. So mobile payments providers that have any access to customer information need to be aware of these state laws. There are 47 different state laws, and they're all different on the way in which you notify customers if you lose information. So for example, Illinois just passed a new law that dropped the time period you have to notify customers if you have any information about an Illinois resident and that information is breached. You have 48 hours to notify of that breach. We, ETA on behalf of the industry, we are advocating in Congress for a federal uniform data breach standard. Obviously, most companies operate across state lines and can't comply with 47 different laws, which all have contradictory requirements in them. So we're looking for a single uniform national data breach standard. We continue to push for that, and we think that's important for the industry. Legislation was introduced in the last Congress. It's been talked about this time around, but again, as we approach the midterms, we're not optimistic that that could move forward very quickly. And it's, of course, less likely to move forward if Democrats take back control of the House after the midterms, for the simple reason that Democrats traditionally don't like federal laws that preempt state laws. They like the state laws to stay in place. So we will see what happens with that, but we'll continue to push it forward. Meanwhile, at the state level, states in the constant search for revenue have also adopted new taxes and fees on money transmitters, so something to be aware of. A lot of those taxes and fees are targeted at the payments industry. For example, Washington State has decided to start taxing payment processors on the merchant discount rate as opposed to the actual penny on the dollar that the processor gets as revenue. So they're charging for revenue, if you will, that includes interchange, even though, as everyone knows, the acquirer doesn't keep the interchange. They pay it over to the issuer. But Washington State believes that's important for them to generate additional revenue. We've appeared before the Washington State regulators and continue to work to get that changed. We've been working in Massachusetts as well. They've tried to change their tax law to increase the tax burden on payments providers, and we're concerned about that as well. So a lot of activity at the state level. This morning in Washington, before the Senate, a woman by the name of Kathy Kraninger is sitting before the Senate for her vote on her confirmation. She's been nominated by the president to be the new director of the CFPB. The CFPB, the Consumer Financial Protection Bureau, is the nation's consumer enforcer. And Mick Mulvaney, who's the head of the Office of Management and Budget, has been the acting director since Richard Cordray, who was President Obama's appointee, left. There have been a massive number of proceedings opened by the CFPB in the last couple of years, including rules that relate to mobile payments providers, prepaid card companies, lenders, really across the entire payments ecosystem. And we've been working very closely with the CFPB to try to hit the pause button on a number of those regulations, particularly in the prepaid space. That's been an area that's been tough for prepaid card providers. and prepaid account providers, which obviously tie into mobile payments very closely. So we're optimistic about Ms. Kraninger as the director. She does not come from the financial services regulatory space. She comes actually from OMB. So she's got a lot of government experience, but not necessarily in this particular area. So the good news is we have an opportunity to help her understand the benefits that the payments industry provides to consumers in the hope that the regulatory environment will continue to be positive for our industry. The only other thing I wanted to mention about policy activities is if you are interested in becoming a lobbyist for a day, one thing, and who isn't really, one thing that we do at ETA is we host an annual fly-in for the payments industry. And ETA, as you all know, hopefully, is we're a nonprofit. So we're a membership-run organization. We have 500 member companies, and our member companies are across the payments ecosystem. And one of the things that we do on an annual basis, because we have a great in-house lobbying team, Scott Talbot runs government affairs for us and does a phenomenal job. He and his team are up walking the halls of Congress on behalf of the payments industry every day. But what members of Congress really like to hear is stories of the small businesses in their districts that are bringing innovation to market. So once a year, we bring the innovators to Washington, and we divide up into teams, and we go visit members of Congress, we go visit regulatory agencies, we talk to them about issues of importance to the industry. And so if you go to our website, which is electran.org, the ETA website, you'll see information. It's on coming up first week in September, so right after Labor Day. We do two things. We have a FinTech Policy Forum, which is a gathering of, much like this, except all the speakers are government officials and regulators to talk about what's happening in the industry. And then we spend a day walking the halls of Congress telling the story of innovation in the payments industry. So if it's of interest, we'd love to have you. Electran.org, again, is the ETA website where you can see all of that. And all of the information about the proceedings that I've talked about today, if there's something that kind of got your interest, we have information on everything that's going on in Washington and how you can participate and make your voice heard and send a member to your member of Congress a letter talking about an issue that's important to you. It really works to have the real people who are out there innovating and out there doing, letting their voice be heard in Washington, and that's what ETA likes to help facilitate. So with that, my time has expired, and I appreciate the opportunity to tell you what's going on in DC. I know the big thing in DC that's going on that I didn't talk about is the one you really want to talk about, but you know, you can go read Article 1 of the Constitution. That's got all the provisions you need to know about that. So my thanks to Marla, and congratulations on another wonderful event, as always. And thanks to all of you. And Chester, I will turn the podium back over.